But first and foremost, I'm grateful for the support of Young Voices. I'm grateful for their support to the show, and they bring powerful content and truth to Common Sense America, and they make it common sense for the American people. So, on that note, I am honored to bring over to the show Jack Salmon. He is a contributor to Young Voices, and I will tell you, he is going to be talking about his most recent article in the National Review. Good morning, Jack. How are you?
Good morning, Eden. I'm very well, thank you. Thank you for having me on.
My pleasure. It's so nice to meet you. You were one of the first I've had from. I have a lot of returning Young Voices, and you're. This is the first time and a new face to Common Sense America. So thank you for being here. And I tell you what, if I could throw you just a couple of questions with the news headlines of today. I noticed Yellen spoke to ABC News this morning, and well, it was pre-recorded, obviously, but she was talking about what's going to be ahead, especially for the East Coast come the winter months with our economy, with food in the stores, things of that nature. Can you speak briefly to that? Because it really goes back to what you wrote in your article, reckless government spending. And it seems that we just are seeing this daily now from the media and the news cycle. Could you break that down for our conservative audience here at Common Sense America?
Yeah, it's quite ironic that it's Janet Yellen that's the one that's dissipating these messages. Given that it was Janet Yellen who was the CEA in the 1990s, she was the CEA chairwoman who warned us about the problems with growing our debt too large.
Mm-hmm.
At the time, our debt was only a fraction of what it is today, and it was almost we had almost balanced our books by the late 90s. She then testified before Congress in 2017 and warned that the level of debt should be keeping people awake at night. All of a sudden, in 2021, she completely changed her mind. She did a complete 180. Suddenly, the debt was sustainable. President Biden's budget proposal was to grow the debt to 117% of GDP, and she described that as fiscally sustainable. So nothing really has changed over that period other than our debts become larger. What's changed is the way people think about it, and people like Yellen in particular. It tends to suit their policy goals to not worry so much about the debt. But what really happened was during this period of the last decade or so, we had very low interest rates, artificially low interest rates, you could say.
Right.
Policymakers were able to roll over their debt into interest rates of 1%, 0%. And so they got addicted to spending, and they spent to no end. And we're now at a point where we're seeing a spike in interest rates, and it's really starting to put pressure on federal budgets, and they're starting to panic a little bit.
Mm-hmm. Well, I read that part in your National Review article, exactly what you said. I even had that part highlighted as we were talking about Janet Yellen. I mean, you even said in the late 1990s, Janet Yellen, then the chairwoman of the Council of Economic Advisors, stressed the importance of paying down debt. But you are now saying in the reckless government spending, they have horrible rates, remain policymakers borrow and spend freely, and bills are due. And then you also go in and say, when the government pays down the debt, it also, this is what she said, it is also borrowing less in capital markets that adds to the economy's savings and helps the economy and households by driving down interest rates, raising investment, and making sure that our children will enter workplaces that are better equipped so they can be more productive. And then, like you said, yet in the years since, Yellen seems to have done a complete 180, reiterating how the debt trajectory should keep people awake at night. How does that help us, though? How is that going to help us? At the top of your article, it says the assumption that rates would remain low forever, encouraged by policymakers. Why are they continuing to assume these things, to borrow and then spend freely our money? Now bills are coming due. And they are not budgeting like we, the American people, need to budget. They're working on a continued deficit. So talk to me about what your thoughts are. I know that you are at George Mason University. That is you are a part of the Mercatus Center, which is huge. Talk to me about what you see on the horizon come 2023 as we are talking about the breakdown of the American family, the kitchen table topics. Talk to me about that.
Sure. Well, first, I just want to corroborate something that you just said, which is
Yes.
that the debt tends to crowd out the capital markets. That's an important point. I was worried about this before interest rates spiked. So I actually compiled all of the studies that were published over the last decade between 2010 and 2020 that looked at the relationship between the debt level and the rate of economic growth, because
Mm-hmm.
that's what really matters at the end of the day.
Mm-hmm.
And there's a very strong consensus among the economic literature that the higher the level of debt gets, the more diminished rates of growth we see. If we're
Mm-hmm.
not seeing growth, we're not seeing wage growth. If we're not seeing wage growth, we're seeing more stagnation.
Mm-hmm.
Now, limited wage growth combined with inflation is a terrible recipe for American families,
Right.
as, as we're now finding out.
Right.
So that's very important. The capital crowd out aspect is very important when we're talking about the debt. But the second part of your question, what's happening now as we move into 2023
Yeah.
is also important, because this spike in interest rates was so unprecedented. Nobody saw this coming, because our policymakers as well as economists had gotten used to this idea that interest rates would be low forever. Interest rates have really been falling since the 1980s,
Right.
for a variety of different reasons. And so people have gotten used to this assumption that they're always going to be falling, or at least they're going to be low as they were since 2010. And so
Mm-hmm.
it's kind of baked into their models for many economists. And so they assume that we're going to go back to that very quickly.
Mm-hmm.
The issue is most of our debt is in very short-term maturities. What I mean by that is the addiction to debt that
Mm-hmm.
policymakers have is so strong, and the assumption interest rates are going to be low, that they roll the debt over into the shortest term maturities they can possible, because they have the best interest rates, the lowest interest rates.
Mm-hmm.
You might roll over debt into a 10-year treasury, but you'll pay 1% interest rate. But if you roll it over into a 3-year treasury, you may only pay 0.1%.
Mm-hmm.
And so our debt, something like 51% of our entire debt is in treasuries of 3 years or less. That's the
Mm-hmm.
maturity date,
Uh-huh.
which means a small spike in interest rates really hurts when it comes to paying interest on the debt. And that's
Mm-hmm.
what we're starting to see now. What I think we're going to see in 2023 is it's quite possible that the total amount that we pay on our interest for our debt is going to be about the same level as our entire defense budget this year. That's what I
Mm-hmm.
think is going to happen. That gives you some idea of the scale, and we're not
Right.
used to this.
Right. No, we're not. No, we're not. Let me ask you this. I want to switch gears just for a second. I'm noticing that a new report came out on the student loan forgiveness aspect this morning. ABC News, i.e., Legacy Media is what I call them, came out with a report. And I wanted to, I noticed that you have reported on the student debt and student loan forgiveness. I've heard some of your interviews, and I wanted to, if we could break that down a little bit. I talk to a lot of educators. I talk to a lot of conservative educators on this show, because we are all about fighting the indoctrination, and we're all about, really removing the indoctrination from the schools. But we're also, I've talked to educators who have stopped teaching because of what they're seeing in regards to what's happening to our systems. But let me ask you this. I noticed this. Evidently, 43 million are eligible for the student loan forgiveness. And then another 26 million have applied. And that was reported in ABC News this morning in the note. And so, my question to you is, what do you see um, if this would continue to go through? Evidently, it was struck down, I guess, in the state of Missouri. And that was what they were reporting on this morning. But talk to me about that. And here's what, this is the heartstrings of it. I'm going to take all policy aside, and this is the heartstrings of it. My parents and their generation went to trade school. My parents are hardworking Americans. Why in the world do they have to pay for a spoiled little brat to go to an Ivy League school and pay for their student debt? Because it's going to be on the taxpayers. That's what gets to the very core of this issue with me. So talk to me about that. Talk to me about the I don't want to be too specific, but I know people that go to Ivy League schools. They're expecting to graduate and get six-figure jobs as soon as they graduate. And I said, wait a second, you got to learn how to make coffee first, like the rest of us, you know? And I got very passionate about that, but that is the God's honest truth. So talk to me about the student loan aspect and what we're going to see on the horizon for us as the taxpayer, for us as the hardworking American who chose to go to a trade school versus an Ivy League school, who chose to be a small business owner versus going to an Ivy League school? Talk to me about that.
So that was the approach that I took in my article. What I was really talking about was the regressive nature of this
Yeah.
policy.
Yeah.
I don't often make predictions, but I did predict a couple of months ago. I was so confident I tweeted it, which never happens. Um, I said I said that my prediction for this towards the end of this year is that this student loan forgiveness gets caught up, it gets stuck in the courts, and then at the end of the year, the president extends the student loan forgiveness into 2023,
Hmm.
which was something that was passed during the beginning of the pandemic, and it was supposedly pandemic relief, but at this point, it seems to be never ending.
Right.
Just
Exactly.
just the cost of the pause on student loans from March 2020 up until now, for the highest earning graduates, it's relief of about $40,000, just to give you some idea of the scale. That's the highest earning. Those are the six-figure graduate degree types.
Right.
They've received $40,000 in loan relief, plus if you calculate the effect of inflation eating away the interest,
Right.
it's about $40,000 for those people.
Hmm.
Now they're going to get an extra possibly $20,000 in loan relief,
Hmm.
and it's primarily the highest earners in the country who are getting this relief.
Hmm.
It's not the the middle income worker. It's not the smart people who chose instead to go into trade schools, as you said.
Right.
And it's also not those who did go to college, managed to get a good job, and actually pay off their debts. I mean, it really flies in the face of those people. Silly you. Uh,
Silly
so,
me. Who would have
so
thought?
it's deeply, deeply regressive. But it was clearly done uh, at a particular time of the year, about 2 months before a midterm election, for
Yes.
particular reasons.
Mhm.
And that's the sad truth. It's terrible, terrible public policy. It's deeply regressive. This is an administration that tries to paint itself as being progressive,
Yes.
as supporting the working person. This was deeply regressive.
Not even close. Not even close. Okay, so let me throw another one at you. Common sense America, we talk truth, we talk kitchen table discussion, and I know I studied you, and I knew what you could bring to the table. So I wanted to, even though we talked about the National Review article, I wanted to also talk to you about something else that came out this morning, and it is in regards to. Um, well, we talked about Yellen, but I wanted to also ask you this in Politico this morning: why Biden's SEC, Securities and Exchange Commission Chair Gary Gensler, is expected to propose major changes to the rules governing in the stock market, and evidently he's enraging Wall Street. Did you have a chance to read that? Are you aware of what's going on there, and what are your thoughts on that?
I actually haven't. I've not had the chance to
Sure,
look
sure,
into that.
sure. So let me read the just a bit of the article. Wall Street's top regulator is pursuing the biggest overhaul of the 51 trillion U.S. stock markets in 2 decades. First, he'll have to fend off a major industry resistance campaign. Securities and Exchange Commission Chair Gary Gensler, a former Goldman Sachs partner turned progressive icon, is set to launch a regulatory broadside in the coming weeks against brokerage and trading giants, including Charles Schwab, Robinhood, and GOP Ken Griffin's Citadel Securities, according to interviews with more than a dozen executive lawmakers, regulators, and investor advocates. The rules that Gensler is spearheading would revamp the stock market's plumbing, partly in response to the 2020 meme stock saga and the Robinhood and other brokerages attracted scrutiny after they were overwhelmed by trading in shares of companies such as GameStop and AMC. Gensler, who has held leading regulatory roles in the Biden and Obama administrations, or I'll just say Biden administrations, has questions whether investors are operating in an environment that is as fair and competitive as possible. He's expected to crack down on the complex web of payments and fees that exchange brokerages and trading firms share with processing investor stock trades. It continues to go on, but there is quite the uproar. And my thoughts are instantly, what else evidently he wasn't so progressive before, and now he's become progressive, and he's really wreaking havoc on Wall Street. What are your thoughts with that initial opening of that Politico article? And I don't usually go to Politico, but a conservative friend posted that on Twitter this morning. I said, "All right, let me dig deeper a little bit here."
So I it's not really my topic, but from
Sure.
what it sounds like, I mean, the article itself sounds somewhat vague. There are a lot of vagacies
Go
thrown into that.
Politico. Go Politico
Right.
for being
So
vague,
that's
right?
not necessarily a surprise, but
Right.
it doesn't sound like it's positive for from the perspective of using market signals, and it sounds like we're going to see a lot more government intervention in markets, and they tend to be using this sort of antitrust policy from 100 years ago,
Mhm.
to sort of push a particular progressive agenda, which really
Right.
shouldn't be involved in markets. Markets are about merit, and so that's what we should be seeing. And so
Right.
I don't know what this means for shareholders, but it's not sounding like it's anything positive from
No,
where I'm sitting.
no, no, most definitely. So those are the top things of the news of the day I wanted to talk with you about. But from your perspective and your leadership role, I've been reading and everything that you've been focusing on, and I'm really just so impressed to talk with you about what is happening. But if you could, this would be the final question for our segment. If you could just briefly talk to the moms, the single moms, the families, families of four, families of six, if you could briefly just talk to them in the way that you would say to your mom, "Hey, this is what we see happening." What would be some of your recommendations from a financial standpoint? As we see policymakers continuing to rape the American people of their wallets, what would you say to your mom or your dad as we prepare for? I'm already projecting into 2023 as I do these segments, knowing that we have a lot ahead of us. The midterms turned again on the American people, and what I'm concerned about is what more the authoritarian state continues to show its ugly head through this Biden administration. And so my question to you is from your standpoint, and I'm a admirer of George Mason University. I do really respect that school and I love what you bring to the table. What are some of your final thoughts on that?
In terms of what I would say to mums across the country, first I would say I'm so sorry that you're having to deal with these pressures right now on these issues.
Hmm.
And in terms of advice, um, given the trajectory of interest rates, it's not just in the for public debt, but it's also in the private markets.
Yeah.
If you can keep your debts at a minimum in terms of whether it's car loans or credit cards, just because it's going to be sensitive to those changes. And other, other than that, I mean, it's difficult because I don't know where inflation's going when it comes to things like food and energy prices. Uh, Sadly, we have an administration that's not interested in keeping energy prices low.
Hmm.
They seem to be against drilling on federal lands and things like this, and they're very keen to close off pipelines for energy resources, and so it's going to be tough. Um, but but do hold out. There, I'm a glass half full type person, and I think there are
I've
sunnier
heard
days
you say
ahead.
that. I've
So
heard you say that.
just hold on.
Well, thank you for that. As I am going to be pushing out your National Review article, how a decade of low interest rates fueled reckless government spending. In your final words of government and reckless spending, they just go hand in hand together these days, and they have been going hand in hand together for quite a while now. If Trump does potentially announce tonight he's running for 2024, would you see on the horizon, and I know you're not a predictor, but I'm just asking, you know from this standpoint, if he does announce tonight, perhaps, do you think that would be him being back in office, or a fiscal conservative being back in office? Do you think it could reel in the reckless government spending, or do you think it's just too far gone?
I don't want to say it's too far gone. From my experience, particularly from a European experience, for policymakers to kick into action often takes near crisis levels of debt and problems. So I never say it's too far gone. If
Okay.
anything, the closer it is, the more likely we are to see action.
Mhm.
Whether or not that comes from a new administration is another question. I was somewhat optimistic that we might see some of that under the last administration, but I didn't get too many signals of trying to reduce our debt. I heard it in the debates, but I didn't see it in action. So
Right.
I hope we will. Things may have to get more painful before we get to that level, unfortunately. But as I say, I try to be glass half full. So
Yes,
let's see
well,
what
thank
happens.
you. Oh, well. Well, Jack Salmon, I'm so glad that you came to Common Sense America your first time here. I look forward to having you back. I love reading your work on National Review, and unfortunately, I don't subscribe to it sometimes. So sometimes I get my limit on how much I can read. But I love your work. Thank you for what you're doing. I love young voices. You guys are great. So please come back, and thank you so much for what you are doing. Thank you for raising the flag and educating us all, and thank you for being able and so sincere to the kitchen table moms and the moms around America as we prepare for 2023. So we're grateful for you. Have a wonderful day, sir.
You too. Thank you so much, Eden.
Thank
Take
you.
care.
You too. Bye bye.
Bye bye.